Hello everyone, welcome back to the channel. So today we will be dealing with the national income accounting part 3. So yes, this will be the final part of this unit, after which we'll be going to new topic, new unit. So in this lecture we'll be dealing with the revised GDP series, drawbacks of GDP, alternatives to GDP, personal income and disposable personal income, per capita income and purchasing power parity. So let's get into the revised GDP. See, the Ministry of Statistics and Program Implementation in 2009 launched a new series of GDP which changed the base year from 2004 to 5 to 2011 to 12. So why it is needed actually? See, the GDP data base which had base year in 2004-5 had underestimated the industrial growth because of the change uh, to the base year 2011-12. There was an estimated rise of 10% in industrial growth in 2018 and 19. See, the earlier GDP series we used to factor cost, that is, factor cost in the sense it includes subsidies but excludes taxes for calculating GDP, while the new series used to market prices for calculating GDP. It here market price in the sense it includes the indirect taxes and excludes the subsidies. See why it was brought changed is it was to bring it in the global adaptation of the new GDP series and to enhance the growth. So widening of data pool. See, previous data of 2004 to 5 was sampled from the annual survey of industries, which comprised about 2 lakh factories. Okay, there's only 2 lakh factories, but the new database added around 5 lakh odd companies which were registered with the Ministry of Corporate Affairs. It brought into new enterprise level 2 into the GDP series, which very much helped in the growth of the India in terms of GDP. This is something uh, the new series brought into existence from 2004 to 5 to 2011 to 12 as the base year. So next is the drawbacks of GDP. See, GDP on its own fails to measure the inequality of the nation. See, it measures economic growth but does not measure the inequality. It does not describe whether people are benefiting from the economic growth or not. It does not describe that. The next is the parallel economy. See, parallel economy in the sense is nothing that black money circulation due to tax evasion and illegal income sources which are not counted for. Next is here again, GDP does not take into account of the loss occurred due to the environment, and hence undermines the concept of sustainable development growth. Like it focuses only on development, growth. Doesn't bother about environment, inequality, nothing. No, growth, that is alone matters for me as according to GDP. Again, it's merely a measure of growth, okay, in terms of quantity numbers, but it's not a measure of progress or development. Uh, but again, we should note that growth is very much necessary condition for welfare. These are some few drawbacks of the GDP. Next, look, we're looking into the alternative to GDP. See, green GDP. See, green GDP is nothing but it's a term used for expressing the GDP after adjusting for the environmental damages such as loss of biodiversity, climate change, etc. See, if we implicate GDP, we can the loss of biodiversity can be monetized. It can account for the losses caused by climate change. So these things all can be brought into the green GDP. Next one is human capital index. See, it seeks to measure the amount of human capital that a child can expect to attain by the age of 18. See, it is measured on three components, namely survival. See, survival in the sense is nothing but it is measured under 5 mortality rate, under the age of 5 mortality rate. Next is school. There are two different aspects in school: quantity, where it's measured by the number of years of school that a child can expect to obtain by age 18, given the pattern of enrollment rates across grades in different countries. Nothing, it shows nothing but how many years can a child survive in the school provided the enrollment rate of the respective area. Next is the quality. It is measured by the performance in tests conducted by the major international student achieving testing programs. Next is health, another component. It is measured using again two indicators, that is adult survival rates and the rate of stunting for children under the age of 5 years. So we should all know that India stood in 116th position among 174 countries in the Human Capital Index report of 2020. Next is Social Progress Index. See, Social Progress Index provides for social and environmental needs of the citizens. So it's assessed among 12 components across three critical dimensions, like basic human needs, foundations of well-being, and opportunity. See, India was ranked 110 out of the 169 nations based on the global SPI 2022. Next is Human Development Index. It's the measure of average achievement in human development taking into three indicators. Again, this is very important index, Human Development Index. Health, which is measured at life expectancy at birth. Education, which is measured through mean years of schooling and expected years of schooling. And standard of living, which is measured through gross national income per capita on a PPP basis, purchasing power parity basis. So we should know that this concept of HDI was developed by Indian economist Amartya Sen and Pakistan economist Mahbub Ullah. And this report is published annually by the United Nations Development Program UNDP as a part of its Human Development Report. And again, India attained the score of 0.644 in 2022, which positioned India at 134 out of the 193 countries in the UN's 2023-24 report of HDI. Next one is gross national happiness. See, it attempts to measure the total sum not only of economic output but also the net of environmental impacts, spiritual and cultural growth of citizens, for better mental and physical health, and the strength of corporate and political systems. See, what it does is it puts happiness in front of development. If a group of people are not happy, that project is stopped. That's very much seen in Bhutan. It was term coined by Jigme Singya Wangchuk, the king of Bhutan in the early 1970s. That is something which we must, in the current phase, take into consideration. Next, let's look into the personal income. See, personal income can be defined as the total income received by individuals of a country for all the sources before payment of direct taxes in a year. See, You might ask, what is personal income? Like, let's say you earn 5, your salary is 5 lakhs per annum, and if you get all the 5 lakhs in your hand, that is personal income. Disposable income refers to the amount which is the actual disposal of individuals to spend as they like. See, when you get 5 lakhs, there might be some percentage of tax, like 5%, 10%. When you pay that amount, let's say for 10% you pay to the tax, direct taxes, eventually you will pay 50,000, you will be having 4.5 lakhs in your hands. So you can spend as you like. So that is the disposable income. Hope you guys understood the personal income and disposable income. Now looking into the next, it's per capita income. See, per capita income is nothing but total income. It's the average income earned by person in a geographical region or territory. Okay, it says about the standard of living and equality of life of a person. Like, it could be measured by GDP divided by the population, mid-year population in a current year. GDP or GNP by mid-year population of the current year. This brings in the per capita income. Next one is the purchasing power parity. It is defined as the number of units of currency needed to buy the same number of products in the domestic economy. Let's take, you have $100 with you. Okay, what are all the products you can buy using $100? Okay, the same thing when you have convert into a Indian rupee or Pakistan rupee or Nepalese whatever currency. When you convert the $100 into other currency and have that money, what are all the products you can buy? Number of units of country's currency needed to buy the same number of products in the domestic economy. Let's say you buy products for $100 in USA and convert the same another $100 into INR. You could also see what all you can buy using the converted $100 to buy what all you can buy using that $100 in India too. So that shows the purchasing power parity. See, it helps in studying the comparative studies of different economies by common currency. Usually we use the US dollar. See, according to the calculation from the World Bank and the International Comparison Program, India ranks in third in terms of GDP by PPD in the world. This is a major achievement. It shows how India has improved a lot in the terms of PPP. So that's it for this unit, guys, national income accounting. We'll be coming with the next unit soon. Do hear the lecture and please post your comments, or we'll respond to you and clear your doubt as soon as possible. Keep following the lecture and we'll come back with another lecture soon. Thank you.